Woo-hoo-hoo-hoo-hoo. What a day, man. What a day. One of those days you love being a trader. Hope you guys made some money out there. Boy, now you know why we love big moves, and now you know why I love range-bound markets. Hope you guys made a ton of money today. Now, it's back to work tonight, though. We got tensions building in the Middle East. We've seen all the headlines this afternoon. Sellers got that big dump into the close this afternoon, breaking below that big trading range we spent most of the day in. The sellers are probably looking for a breakout pullback tomorrow and another leg lower. And you know, breakout pullbacks, we're pretty bearish overall right now, definitely. But breakout pullbacks, they tend to give us ways to make money on both sides of the market. Got some long trades, some short trades. I have a ton of great setups we're tracking for Friday. We got one day left this week, and I'm going to give you guys a great roadmap to make some money on Friday. Now, before we jump in and get the party going, make sure you subscribe to our channel. I don't want you to miss tomorrow night's video, so make sure you subscribe. And if you like these videos, give me a thumbs up. Give me a hell yeah down in the comments section below. Thank you so much for tuning in and supporting the channel. Enough of the intro, though. Let's get ready for Friday. Where are the best trades setting up for Friday's trading session? Now, starting off tonight, as always, on the 60-minute charts, the Nasdaq and the triple Qs, the S&P, and the SPY. Remember, I like to use the 60-minute time frames to plan our trades for the following day. Later on in the video, we'll drill down to some tick charts. Tick charts make the entry timing much easier. So we'll start off on the big picture on the 60-minute, and we'll drill down to some tick charts and talk entry tactics, give you guys some game plans to make some money into the weekend here tomorrow. Now, what are the 60-minute charts telling us right now? We're definitely bearish overall right now, right on the Emini and the Nasdaq. Most important thing, though, is we had a range at the beginning of the week this week, and we now have basically broken down into what I call a measured move, right? Symmetry, A, B, C, D, both on the S&P and of course here on the Nasdaq. So we're definitely bearish overall right now, but again, I would imagine bears are probably looking for a breakout pullback on the way lower on both the Nasdaq and the S&P. And if we play our cards right tomorrow, there are probably ways to buy it on the bounce, sell it on the breakout pullback, and we're going to go over all the details, of course, here tonight. So plenty of ways, I think, if we're lucky tomorrow, we can play both sides of the coin here on the S&P and the Nasdaq. Now, before we jump in and talk about my favorite entry tactics and entry setups I'm tracking for tomorrow, let's quickly check the schedule for tomorrow. There's no major news on the calendar for tomorrow. The two things you want to keep on your radar for tomorrow is obviously we continue to monitor the bubbling tensions right now throughout the entire Middle East. That's definitely a big wild card that we're all watching closely right now. But the most important thing is tomorrow's a Friday, and we have a very specific mindset on a Friday. Remember, Fridays tend to get low volume into lunch. Liquidity dries up. So my mindset on a Friday morning is get into trades early when liquidity's good, and then try to leave a runner. If you have any experience in these markets, if you've watched any of these videos the past few months, we oftentimes see big moves on a Friday afternoon. So again, the goal is get in early when it's good price action, good liquidity, to leave a runner into lunch into the afternoon, right? So those are two things we're watching for tomorrow. Again, we're keeping track right now of new developments out of the Middle East, and the mindset on a Friday: get in early when the getting's good and try to leave that runner. We've seen so many big moves into the afternoon on Fridays lately. Those moves can make your entire week into lunchtime and Friday afternoon. Now, back to our charts. It's good to know the mindset. It's good to know when the news is, but you know how we do it. The money is made on the charts here. Let's now go over my favorite trades here for tomorrow. We'll start off first on the E-mini and the SPY, and we'll finish up tonight on the Nasdaq and the triple Qs here. As I mentioned in the introduction, we began the week in a range. We now have that breakout, and if you're taking my free classes right now, we talk a lot about measured moves, and most specifically, one of the most important ways to use a measured move is after a range breakout. We saw a good example back here: range, right, breakout, measured move right there, right? So this is a very, very simple idea. It's a range, it's a breakout, and it looks like we're sitting right on some pretty significant support here on the 60-minute. Again, no one's arguing the bears definitely have control right now of momentum, but is this a good place to sell right here? Probably not a great place to get short. You're welcome if you want to, but I'll be looking for ways to buy that bounce and then look for that short back down from there. Let's talk about that in more detail here. The game plan worked fantastic today, and hopefully we can get some more of this coming tomorrow. Over to our tick charts now. Remember, tick charts, in my experience, they make everything easier, especially entries and trade management. This is a 7,000 tick chart in the upper left-hand corner, and that, my friends, is the 21 EMA, one of the most important tools that we use in our trade room. There are really two key insights that can tip us off to where the best trades are right now. We have that juicy range, and I always tell you guys how much I love range-bound markets, right? Buy low, sell high, focus on failures. You guys know that game plan. We talk about that a lot in our free trading classes. Well, you'll notice right now there's that range above us in this breakout. Anytime we see a range breakout, we expect a breakout pullback off what I call the underbelly, right, of that trading range. So we assume there are bears. We assume right now, unless things continue to develop in the Middle East, we assume right now that sellers are probably not too interested in short and down here. They may keep going down to that measured move, as I mentioned earlier on in the lesson. But it's tough to justify being a bear right now and selling right now. I like the idea of buying on the pullback, love the idea of selling on the bounce, and then depending on what happens, we might get lucky and get another one of those juicy double bottom reversals. We talked about this last night, right? That double bottom reversal was one for the records this afternoon. So we definitely have a lot of ways to make money on this. Think about that breakout pullback, right? That breakout pullback as we go. And let's kind of talk about how to unpack this, right? Let's talk about ways in which we can profit on that breakout pullback. Now, the most important thing to understand here at this point is we're very bearish. So for me to want to buy right now, I have to be careful, right? This could easily keep on grinding down overnight into that measured move. So, and really that will not change a single thing for me here. If it does, breakout, measured move, right? Makes sense. So the key is, though, is that because we're so bearish overall right now, in order for me to fight that momentum, I'm going to need to basically trap some sellers in and use their stops to fuel that move going higher. This is where we're going to use what I call a crown reversal pattern. We talked about this pattern last night. It's a very simple pattern. It's a higher high in price and a trap below that low. It's a higher high in price, and a trap below that low. Remember, the goal here is to trap in some of those, we assume, rookie sellers trying to sell way too low in a bear market and use their stops to fuel that move going higher. Now, usually these will end up going a little bit more than a measured move, right? So imagine an A, B, C, D, right? You should go a little bit more than a measured move up there. We'll know more once we see more here tomorrow morning. Now, once we get that crown reversal, we then end up in the underbelly of that trading range. This is our spot now as we go higher to now, hopefully, let's see if we can get some rookies chasing it going higher, thinking we're going to end up back up into that trading range, and look for one of these, right? Wait for it to pop up. Buyers try once, buyers try twice, and short back down in. Buyers try once, buyers try twice, and get that short going back down in. In my free trading classes, I call this a failure pattern. Be a two-try failure. Now, where do the bears want to go? The bears want to retest that low, right? As we're going lower, there's one pattern I always look for before we retest that low, and this is what you call a bull trap. It's a very simple pattern. It's a lower low in price and a trap above that high. Now, once we retest the low, then we look for that double bottom reversal, and we'll talk about a game plan that here in a moment. But first of all, though, if you're watching for the first time right now, I'm sure a lot of this is brand new. Crown reversals, buyer failures, two-try failures, bull traps. This might be a brand new language for you tonight if you're tuning in for the first time. Not to worry, though. I teach all of these patterns, and more importantly, I have hundreds of examples of these trade setups on real charts, right, in my free trading classes. What I'll do is I'll put a link up there for you in the upper right-hand corner. Grab that link and take my free trading course, because the strategy you'll learn in that short video series will teach you a remarkably simple trick we use every morning in our members trade room to know, first of all, where the best trades are going to be that day. And most importantly, I'll teach you my 4 favorite entry patterns to help kickstart you making money if you're not making consistent money right now. If you're tired of missing the best trades each day, hit that link that popped up there. Take that free trading course. It's perfect for someone trying to make the jump into full-time trading. And again, in that free class, I've got examples of things like crown reversals, that higher high in price, that pop up, right? Trap in those buyers, 1, 2, with that 2-try failure. And then as it drops and they make their way back down to retest a low, we don't chase it. We wait for that lower low in price, that trap high above there, and short to finish off that move here. Tons of examples of all those setups in that free class. And by the way, too, if you can't grab that link that popped up there in the upper right-hand corner, I'll put all the important links tonight down in the description of the YouTube video, all the free class links, and also, too, I'll put my Twitter feed address in there, too. I put a lot of updates on Twitter throughout the day as well. So check out the description, and I'll give you guys more details down the description here below. Now, couple of questions here for you. We know we're looking for that breakout pullback and that retest. Couple of questions here. First of all, what would happen if we begin to run and make that move back up into that trading range? We're at big support on the 60-minute right now. There's a big range above us. Let's talk about some different scenarios. I also want to go over how to buy that double bottom. If we end up pulling back here, and we start seeing this thing start to grind, right? That's the giveaway. Once it grinds up like that, it'll separate off the moving average. Once it grinds like that, it's probably not going to be the breakout pullback we had expected. What we'll do is we'll draw a trend line off the highs. We're going to bring it down to that low. See how I found that channel? What I'll do now is look left, find some prior swings, and these are usually where your best entries are going to be. Remember, like we talk about in that free video course I mentioned earlier, ranges are magnets, right? So if we don't hold down here, it could very much, right, very well go into that range and really rip and take out some of these big highs up here. That would be a fantastic trade for tomorrow. The key is once we get that pull back, we start seeing that grind. That's the giveaway, right? Now, this entry pattern right here, it could be a trap, like I'm showing you right now. It could also be a failure where it gets underneath the moving average. Bears come in, they try to get short. That'd be a failure into pullback combination, like we talk about in the free course, right? So any of the entry patterns off that channel could work. Remember though, if we do pop up and we start pulling back, watch those buyers try once, watch those buyers try twice, and then we'll look to sell right into those stops for that retest of that low, right? Pops up, buyers once, buyers twice, right? There's that run right back down to those lows. So keep an eye out for that pattern. And of course, let's finish it up here right now with a double bottom. We know how much we love double bottom reversals, right? We saw a beautiful one here this afternoon. Let's say now we do get that crown reversal on the way higher. We do trap in those buyers, right? And that run back down again. At this point, think about who is trading down here. Anyone who sold short on the bounce, they're probably going to be taking the bulk of their position, I would imagine, off as profit at that low. So it's safe to say that sellers become buyers at that low. I would also say too that professional buyers who buy low, that's what they do, right? Buyers buy low. They are going to be buying at that low. And if we're lucky, let me word this afternoon, if we're lucky, we'll get some rookies coming in and chasing it, running lower, right? If we're lucky, we'll get some rookies coming in once and twice, and we can wrap those, right? We can rope in those stops for that punch, right, as it goes higher. Now, remember, we talked about this last night, right? Where does the market want to go? It'll want to go take out the other side, right? The other side of that move. That's my target on the other side, right? Again, bears once. Now, why twice? Why twice? Well, in my video class, we talk a lot about what we call the 2-try rule. You know, human beings, they love to try things twice. The markets are made up of a group of people, and oftentimes we let them try twice because that will give us the stops that we need to fuel that move. Remember, it's a bear market overall. So I'm not going to pick that bottom, right? That's a rookie mistake, picking tops and picking bottoms. I would much rather identify an area where I want to get long and then wait and see, right? Let the sellers show me their cards. And once they've dug their own grave there, it's just a matter of time before they get stopped out and it squeezes and runs higher. And also, too, keep in mind, too, right? If this was to, for example, pop up and begin to grind, yeah, you know what to do now, right? Get some profit off at that high and then find that new channel. Remember, the key is the grinder. Goes through it and begins to grind. Remember, there's a range overhead, right? If it grinds, it'll want to take out those highs overhead. So find that new channel, mark off that high, mark off that low, and look left. Go find those prior swings, right? And hit that first test. First test is the best test when it comes to channels. Okay, I think by now we have a pretty good idea of ways to make money on this, right? The crown reversal, to protect ourselves and get in on that pullback. Trapping those buyers with that beautiful buyer failure off the high, take that profit at the low, and then bring in the rookies, rope them in once, in twice, hit their stops with a 2-try failure. I call those double bottom reversals. Remember where the market wants to go in those situations, wants to take out that high. If they keep on going through that high, right, bingo, find the new channel and don't miss that first test off of that low. I'm getting kind of excited just talking my way through this here right now. If we get half as much as we saw today, I'll be a very happy camper. Okay, so that's a pretty good game plan for tomorrow. Now, there's one more factor I want to talk about: ranges. As we saw today, whenever you see a big move down like this, we oftentimes end up in a trading range. That could very much happen tomorrow, and I want to make sure you know once again the right game plan if we do go sideways. Let's go over now to the NASDAQ. The NASDAQ is very similar, of course, to the S&P. Everything we talked about on the S&P can pretty much be applied to the NASDAQ. NASDAQ has the same fundamentals to it, right? We kind of found our way into a range here this week. We then got that strong breakout leg, right? The breakout leg becomes the measuring leg, and we're basically sitting at measured move support at the low of this channel. Again, no one's arguing whether or not we're bearish or not. We're certainly bearish right now. The question is do I really want to sell down here? You know, we may keep going lower, but again, the situation happening right now in the Middle East would be the biggest reason for this market to keep on grinding lower. That, unfortunately, is out of my control, right? We don't have any control over that. This is not a very wise place to be selling short. We don't make much money in the long run by selling as the market goes down. This is a great place right now to buy that bounce and then look to reload on the short as it rolls over here. Let's now go back to our tick chart. You will see it's almost the identical situation here right now. We have that big old trading range right in the middle, right? Got this big breakdown, and like I mentioned before, whenever we see a range breakout like this, we start paying attention to the underbelly of that trading range, and we look for what again we'll call a breakout pullback, right? We expect bears to look short that breakout pullback. You'll notice also too, right? This is the breakout leg of that trading range. We're talking a lot about breakouts and measured moves today. That's the breakout leg of that trading range. This would be your measured move leg. So nobody should be surprised if we continue to go lower here overnight. We went a bit lower in the overnight as well, right? That should not surprise anybody. And hopefully they do in all reality, because they finish off that measured move. That would be a great spot, right, for that crown reversal. Pop it up into the underbelly, back down, retest, trap the rookies in, right, and back and forth, right? How much do we love that sequence, man? This is why we love big moves, right? Big moves make for a pretty easy game plan. I want to talk about more though right now is the range. Okay, you guys, if you're taking my free classes right now, if you're in my trade room every morning, you know how much I love range-bound markets. Ranges, they make it very easy to structure good trades here. Now, let's talk about a range here. So when it comes to ranges, what you need to understand is that ranges love to rotate. Okay, ranges love to rotate. So what will happen is, let's say, for example, a range develops. If we go up and then back down, the amount we go above the range can be used the amount below the range as an area of support, right? The market's going to want to rotate back and forth. You can see kind of how that works on this range overhead. So if you understand that ranges, they act like magnets and they love to rotate, one of my favorite trades, we talked about this a lot last night, and it just works so well today, is whenever we shoot below a trading range. Right? Remember, we're quite oversold right now. And I don't like to use that word because I don't have any right to say when the market's oversold. But again, we're sitting at support in the 60-minute chart. It can keep going lower, but right now, right, we're quite oversold. So if we get into a range down here, it's tough to imagine that sellers are going to be trying to sell under that range. So this is where we can easily fool the rookies. We can literally trap the rookies. Once it pulls back, let them try a couple times, right, and buy into those stop losses. Same thing over here, right? I'd love to go sideways here, get underneath that trading range, right, and then use. Now remember, it's a bear market, so we can't go just picking tops and bottoms here. This is where a failure pattern comes in. Remember, we need to, if we don't have momentum helping us, like right now, if I want to buy back up again, I don't have momentum on my side, right? The wind is against me, right? Momentum is against me. So I have to get something else as a catalyst to run this market going higher. And to do that, we love to run stops. So let the bears try a couple times. Because the more they try, right, the more their stops are going to get lit up. And they can use that, again, I call this two try failures. I'll tell you right now, a crown reversal pattern, right, a crown reversal would be just gorgeous, right? That would be ideal. Higher high in price and that trap below that low. Not absolutely necessary, but certainly a definite bonus. Once those bears, though, once they get trapped in, right, look what happened over here, right, trapped in, then you get that strong run, right, going back up. Now, as we rotate higher, right, as we rotate higher, you want to think about now where the market wants to go. Again, think about rotation, the amount below the range, the amount above the range. So in this example, we know the market has two things on its mind. One is take out the high of the range, and two is to take out the pendulum swing, right, on the opposite side. So if we understand that principle, as we're going higher, I need to buy as low as I possibly can because we're a bear market overall. And who knows, there could be a channel waiting up there, and I don't want to buy into that channel. What is the pattern? What is the entry setup that allows me to buy as low as possible? It's a bear trap. It always will be a bear trap, right? You guys know how much I love traps. Higher high in price and that trap below that low, this is the pattern you want to look for as it finishes off that pendulum swing. And if we're lucky, we'll get a channel, draw a channel off the highs, bring it down off that low, and we'll tag off that channel as well. Mwah, that's a beautiful, that is a gorgeous, it's almost a guaranteed winning trade right there as it rotates up off of that low. So bottom line is, all kidding aside here, right? Two try failure into that higher high in price and that trap. Remember, you can do whatever you want, but we don't take that trade up here, all right? We don't take that trade up there. We don't chase it as it goes higher, right? We have to understand where that rotation target is and make sure you're putting your profit targets there, not getting in. Now, if they punch and keep on grinding, okay, different story. Now we have evidence of a break of that level, and now we can go out and find that high. You know the drill, right? Find the high, mark that channel, find that swing, and buy that first test, right? So same basic idea as we talked about so far. The key is it needs to break that pendulum swing. At this point, it'd be breaking the underbelly of that range as well, and then that grind. The grind is always the giveaway, in my experience, that you've got the bears kind of walking away, and that leads to that grinding motion going higher. Now, at the same time, let's back this up a little bit here. We saw one of these today as well, right? So at the same time, let's say we do go down at that trading range. We do get that bear trap, right? That 2-try failure pattern, to be specific, off that low. We do wind up now completing that pendulum swing. We don't grind and go higher, right? Now, as it rotates higher right now we come in and we see something like this. We pop up, the buyers once, the buyers twice, right? Lower highs now. Not pop and grind, right? Not pop and grind. 1 try for the bulls, 2 try for the bulls, right? Now they're roped in, and now we trade that rotation back down again. How would you trade short on the way down with a bull trap, right? Remember, as we talk about all the time, right, in these videos, it's failures around the edges. It's traps as it rotates. Failures around the edges. What I mean by that is look for failure patterns to buy low and sell high. And then as it rotates back and forth from one extreme to the next, you're using trap patterns, right? Or trap setups. Let me teach in the free trading course. Okay? Failures around the edges, traps as it rotates back and forth. Rinse and repeat. Rinse and repeat. All right. So now you get a pretty good game plan now here on the NQ as well. Again, this range game plan can easily apply to the S&P as well. Now we just wait a couple hours, see what happens here overnight, get a good night's sleep, and come back tomorrow and hopefully finish up with another fantastic day tomorrow. Now, the game plan is set for tomorrow morning though, 8 o'clock Eastern time. I can't think of any better way to do this than to come out and learn with us, look over my shoulder, ask a bunch of questions, trade along with us, have some fun with us every morning in our morning trade room. Every morning, 8 o'clock Eastern time, we trade together. I can't think of any better way to learn to trade than do it with us every morning as a student in the trade room. I'll put all the important links for you down in the description of the video. I would definitely recommend take the free classes first, get started, learn the basic fundamentals, get your feet wet on that. This video will make a lot more sense once you take that free trading course. Then definitely follow me on Twitter. I'll put the Twitter feed down in the description there as well for updates throughout the day. And I'll also put the membership links, the trade room links, the video class links down there as well. Hopefully one day I'll see you sometime soon trading along with me in the morning trade room. If you got questions, need help, have challenge, trouble getting in, whatever the case may be, don't be a stranger. Megan and I are always here to help answer questions and help you with tech support stuff. So you can always call the office or use live chat as well. So if you need help, definitely reach out. Don't be a stranger on the live chat or the telephone. Right, guys? Boy, what a fantastic week it's been. A great day today. We got one more day tomorrow. Now get some sleep, get some rest, get a busy day tomorrow. Remember, Friday morning, early in, when the getting's good, leave that runner. And hopefully I'll see you sometime soon in the morning trade room as a brand new student. Guys, my name is Joseph. Thank you for watching all the way to the end. If you're still watching right now, you are the person I do this video for. All right? If you're still watching, you are the person I do these videos for. So thank you so much for your dedication and commitment. Now get out of here. Enjoy your evening. I'll see you tomorrow morning in the morning trade room. If not, same time, same place, back here on Monday evening. Have a great weekend. We'll see you guys next time. Adios, amigos. Bye-bye for now.